Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. Basically what we're doing in these videos is trying to get you some information, what you need to know before you go. So before you go, make sure you hit that subscribe button. There's a little bell right there that'll let you know when I pop in here. Sometimes it's unannounced like this video right now. And if you have that bell lit up, it'll give you a heads up. Hey, Wolfman's going on. So check it out. All right. Smash the like button before you go as well. And drive this content, folks, over there on the side. Comment. I'm keeping an eye on that. You guys can drive that content as we go along here. If you want me to cover something, hit me up. All right. So I popped in here right now because we just got the unemployment numbers, non-farm payroll. This is the unenjoyment Friday I've been talking about. Well, numbers have come in and way lighter than expected. The hiring, 210,000 hires. It was expected to be 553,000 folks. So well over half less than what we were expected. One of the real conundrums here today is though that it came in at 4.2% is the unemployment rate. It was before 4.6. So that unemployment rate comes down. It's kind of signaling to folks, hey, everybody's being hired. Well, we know that folks aren't working. We know that the unemployed are still out there, but they aren't getting hired, showing up in this number for 210,000, expect to be 500. Why is the unemployment rate down ticking here? We should see that upticking or at least stay the same because people aren't getting hired. Well, what's happening? I think folks are starting to try to figure out how they can stay at home, maybe having this entrepreneurial push here, I think is really what I was looking for, a different word. But anyway, this entrepreneurial push is what it seems like. Maybe people are trying to do their online thing so that they don't have to go into the office or try and shorten that work week. You know, folks have gotten comfortable working from home. And if those jobs are telling them they need to come back into the office, they might be trying to figure out a different way to create an income. And I think that might be what we're seeing here in the markets right now. We got oil moving a little bit higher here. I would love to see this market hold off a little bit. We're going to have to keep an eye on the manufacturing data. We got our ISM, which is the Institute for Supply Management, later on today. Now, remember, anything above 50 is expansion. Anything below 50 is contraction. It's supposed to come in right around 60. Institute for Supply Management Purchasing Managers Index. Keep your eyes out for the ISM PMI. All right. So that's one of the most important data points to look for in the month, and just happens to line up with our unenjoyment Friday here. So could make this market really spin. All right, gold futures finding a little bit of a bottom here. I'm expecting to see gold futures make some moves higher as inflation is hanging over our head. That would be something that would make us think that, hey, inflation starts rallying, gold rallies. Those are the levers and pulleys in the markets that usually happen here. All right, Bitcoin is off just a little bit. It's been holding up better than most of the cryptocurrencies as of recently, but it's right at the point of control. This is where the market finds value, 57,000 folks. So I think we're going to kind of calm down here a little bit for the foreseeable future in Bitcoin. Now, VIX, we've had some major spikes in the last couple of days, right? We've gotten the VIX jacked up. So this is the time to be taking advantage of selling premium. We're right in between earnings season. So there's a lot of clean months out there to be trading these options. So when we have this high volatility, that's when we're looking to implement strategies where we can take advantage of that high volatility. Please check out the videos that we have on YouTube at Pro Trader Strategies so that you can find out some of these guidelines before you get into trading these too heavily. Make sure you're following those guidelines because we talk about the volatility, where it needs to be in a sweet spot for us to start selling option strategies. And we are right in and around that area. Now, we talked about this with the Dow Jones Industrial Average. I think it's actually going to be the one that has a little bit more value here as it's the blue chip. Something that really drove the Dow higher yesterday was Boeing. Boeing had a huge day yesterday. Basically, China said that they're going to allow Boeing airplanes to start flying again. So they made a big move to the upside. That was probably one of the major drivers of the Dow to the upside. Now, across the board, we had the equities moving higher. Now, we've been talking about these dead cat bounces. Are we getting that right now? And what I mean by a dead cat bounce, folks, is we used to call this in the markets where you would get one of these big red days. I'm just going to have to use this one. You get a big red day candle, and then the next day you get basically a complete retracement of the previous day, and that's basically a dead cat bounce, because then what happens the next day? Everybody starts jumping on board with this trade where the market starts coming back in. They don't want to miss out on the upside, and then that's the dead cat bounce. Boom, the next day you start getting that big drop. You can get another dead cat bounce where the next day you get a bit of a rally, and maybe people are starting to buy into that. Hey, looks like we're getting a bit of a rally here, and they start buying in. Well, that is a scenario where we get these bounces, and that causes a lot of pain in the overall market. So when we're seeing something like that, I would be very worried about downside risk here. Now, we haven't worked through or gotten below this Fibonacci right here at, let's call it 45,000. All right. A break below that would resume back to this point of control here. Probably should make that a little bit thicker. If we go back to this point of control here, which is the POC, right? That's where time and volume has been spent. It's actually, this is for the volume, which is the time. Sorry, that's actually the time. Now that I'm thinking about it. The time volume, that means we've kind of sat there and not really had a lot of trading, but it's just kind of fluttered in and around that price for a foreseeable future, or for a very long time. And what we see with that is that when that number kind of gets stuck in everybody's head, they don't really worry about it when it's trading around there. We're just all kind of complacent. Oh, we're back here again. Okay, well, time to pick up the cards or read the paper for a little while, because we're not going anywhere. So that's what I would expect to see here for some of the equities when we retrace back down to those levels. All right, here we got the E-mini S&Ps. I think that we could hold on to a little strength here, despite the fact that this economic data point was really a miss. There's a lot of folks saying they're going to revise the headline number up a little bit because the unemployment rate went down with the nobody getting hired, which is a bit of a conundrum here. I think that this bad data point is going to help keep equities a little bit elevated, because it looks like we aren't going to taper anytime soon if the economy starts to flutter here. So we could see a bit of a contrarian type trade where we see bad economic data, but the equities get a bit of a lift. And that's really because what we're going to be trying to read the tea leaves as to what the Fed is going to do with interest rates. We just heard recently, they're going to start tapering. That means they're going to start slowing the asset purchases. Asset purchases are just buying bonds in the futures to try and keep interest rates lower. Well, they've been talking about slowing that down. I'm not going to buy so much, right? Or use as much volume to hold this market up or prop this market up. So if we start seeing them taper, meaning slow down those asset purchases, bonds start going down, interest rates go higher. It's the levers and pulleys of the market. Literally, they are, if we look at price and percent, as the interest rates go up, or they allow them to go up, because I think they're buying bonds, right? That should drive bonds higher. But as they stop buying bonds, that price starts dropping. It's like a teeter-totter effect. Then interest rates go higher. All right. So as the bonds go down, you can look at it either way, whatever the levers and pulleys you're trying to look at. One thing I want to talk about, if interest rates start going up and bonds start going down, that price is going to affect your portfolio value. So make sure you guys check out my bond videos where I show you how to lower your overall cost basis on these bonds that are going to really start going down in value here in the near time future. That's about it. I just want to pop in here, try and clear up some of this vagueness that's going on. Hey, how you doing? Try and clear up some of this vagueness, or what people are talking about on TV going back and forth. Everybody's trying to talk their position right now, saying this, hey, this unemployment number is really good. Other people are saying, well, I think it's more of a stay-at-home trade where maybe some folks are getting this entrepreneurial push here and doing Etsy or doing their artsy things, trying to sell things online or whatever they're doing there to make that income. How long will that last? Is it here to stay? Is this the new dynamic that we're going to be looking at going forward? We'll have to see. But right now, this number, non-farm payrolls coming in 300,000 less than what was expected. And we saw the unemployment rate go down, which means, hey, people got hired. Kind of a disconnect there right now. We're going to have to peel back on some of this. I'm going to be waiting for the ISM services number coming out a little bit later on this morning. That's going to be the most important number for us here in the United States. ISM PMI for the service sector, because we are a service sector economy. All right, that's all I got for you guys. Hope you guys can use this in your trading. If you took anything away, please smash that like button for me before you go. Subscribe, hit the bell, because I pop in here unannounced all the time, folks. And that way you'll get a heads up when I'm showing up. So there's a little bell right there next to the subscribe button. All right, and comment. I will circle back around for you folks. That's it. Can't take that? Take it easy. The average hourly wage is starting to rise. Good call. That even though it's a struggle, because it's such a struggle to get folks hired right now and to find people to work that are wanting to work, that average hourly rate is starting to uptick as we speak. All right. Good question. Thanks for reaching out. Take care.